Hi, and welcome to Market Conversations. In this video, I'm going to talk a little bit about Alibaba. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Wow, today we actually had a green day. It was up 3.33%. But if you take a look at this 1 year daily chart, it's not pretty. So we can see back in January, it hit a high of 120 and it couldn't break that resistance. Back in July as well, tried to break that 120 resistance, couldn't, and we slowly dropped all the way to 58. This was back in November, and then came back up to 120 in January, and now we're going back down. And today we actually had a bullish day. We can see that it's been consolidating in this range of 80 and 84. So let's see if tomorrow can break that 84. And lately it's just been having one green day a week. So let's see if we can get 2 green days this week. You can see that the RSI is currently oversold. It is currently at 32. And before that, it was at 24. And this pattern here, it is considered an inverse head and shoulders. If we take a look at the article here, trading the inverse head and shoulders pattern, if we don't go down here, it is an example of a bullish reversal pattern. This means that the price action and trend that occurred before this pattern developing was bearish. The inverse head and shoulder pattern often shows up at the bottom of a move in the market. That is not to say that this pattern cannot develop at the top of a market. It can. Similarly, we can see standard head and shoulders patterns emerge at the bottom of a move. The inverse head and shoulder pattern is one of the most powerful and consistent bullish patterns. Let's take a look at some components that make up this pattern. The pattern is made up of 3 troughs or 3 triangles. The left and right shoulders should be close to symmetrical, meaning they should be very similar in their shape, same time in price measurements. I found this to be very, very important, but often overlooked condition that helps increase the success rate of this pattern. Volume tends to decrease. Volume is highest on the left shoulders, then falls into the right shoulders. Patterns that have volume dropping on the right shoulder have a probability of becoming profitable. The neckline must be broken for the pattern to complete. The breakout above the neckline must be on the higher volume. So what does this look like? Inverse head and shoulder. The chart is Microsoft's 15-minute chart. The image above is an ideal inverse head and shoulder pattern that you could want to see. The left shoulder low is above the right shoulder. Volume decreased as the pattern developed, and the 2 shoulders are relatively symmetrical. So you see the left shoulder, the right shoulder, and head. A quick note about symmetry. It doesn't have to be exact. Well, you can see that with Alibaba, it is almost exact. There is a big difference between the standard head and shoulder pattern and the inverse head and shoulder. With a regular, we never take a trade until the neckline is broken. Attempting to anticipate the formation of regular head and shoulder is akin to chasing straights and flushes in poker. With an inverse head and shoulder, we can enter early. This chart's almost identical. So hopefully this is the beginning of a bullish trend. Let's take a look at the volume. You can see that today's volume is actually quite low compared to the previous few days. On the call options are increasing. We can see that the 85 strike, 11,000 volume traded. And on the put side, we have the 75 strike, 3,300 volume traded. And this is for the weekly. And then if we take a look at next week, we have a pretty high volume for the 90 strike calls. That's going for $77. And people are buying the 100 strike calls, 4,500 volume traded. And those are going for 13 cents. That's pretty risky because the highest that I've seen Alibaba can go up in a day would be like 10 points. And that's very rare. And if we take a look at a monthly expiration, April, we can see that 95 strike has 10,000 volume traded. And you take a look at that, 21,000 open interest. So people are expecting this stock to go to 95 or higher by April 21st. So that gives us at least a month. And if you're thinking about getting into BABA, or if you're already in it, let me know in the comments below. And if you're thinking about buying options, I would consider buying further out expiration dates just because I've lost quite a bit of money with Alibaba in the past. You can see that when it went to $58 last year, and I've got into Alibaba when it was above 200. I had to take a huge loss on this, and here we are, $83. It's incredible. And sometimes it's not about the fundamentals, it's about political risk, as we can see many day in day out with these Chinese stocks. So hopefully the next time we can try to break that 120 resistance.